Yes or no? Excellent. All right, ladies and gentlemen. I can see a lot of people like to take a lot of pictures. Don't worry, we have time. We can do it a little bit later as well. Okay. Our next guest speaker is the Financial Project Manager of Atlantic Global Banks. He's also the Chairman of the Association of Chartered Accountants of Great Britain. Ladies and gentlemen, please put your hands together for the one and only Mr. Kevin Russell Smith.
Good afternoon. First of all, I'd like to add my welcome to those that have already given their welcome to this very important event. So I hope that you've had a taste of what today and tomorrow is about. My job today is a little easier than the two previous speakers because I have the benefit of the talented simultaneous translation at the back. So if you do not happen to speak English, I do not have to speak and then wait for somebody else to translate. So that makes it much easier for me and hopefully much easier for you also. I would like to introduce you to an area today that's been referred to in the last two presentations. And it's an area that's already starting to have a very major impact on our lives, even if you don't realize it. It really is invading every possible part of our lives. But even more important than that, it's an area that is due to grow exponentially in the coming years. So welcome to the world of FinTech. So FinTech, it's been mentioned. Now, I don't know the people's experience in the FinTech world here today. So the purpose of this presentation is very much to look at understanding FinTech. It's a very detailed presentation with many slides. But what I want to do today is to try and give you a relatively brief overview. The presentation will be available to you afterwards, so some of the slides I will go through really quite quickly, but if you want to look at them in more detail afterwards, please ask the organisers for a copy of the presentation, because the detail really is interesting and really is important, but it's always a little difficult to go into very small detail, maybe in a big room and on a big screen, so it's better maybe to look at it by yourselves. But what I am going to do today is to go through these areas. So what is FinTech and how is it structured? Who finances FinTech and what does it focus on? How are banks responding? Because FinTech is having a major impact on the financial world and on banking. And it's important for us to understand their role. They are big financial players with a lot of assets and a lot of investment ability. So we need to understand how they are going to be involved or not be involved in FinTech in the future. I'm also going to look at some of the major players in FinTech and what are the different sectors that it really looks at. And who are the leaders in this region. And then we're also going to look at some of the different systems. So down the right-hand side, there's a lot of detail about how the actual systems work. But again, I'm going to try and keep that to a process that is quick and easy and interesting for you today, rather than actually getting too buried in the detail. So, what is FinTech? I mean, even for those of you that haven't had any involvement in the past, I think it's fairly obvious, really. FinTech is finance plus technology. It's a very simple word its roots are very, very obvious. I think the most important thing to say from the very, very start is it is a very hot direction in and around technology. Its growth, as I have already said, has been massive from a standing start very, very recently, but its growth is exponential already and will continue to get bigger and bigger and accelerate faster and faster. So if you don't know much about FinTech, you really should be. And so hopefully that's what I'm going to help you to start to understand a little more about today. So even if you can't necessarily see the detailed numbers at the back, this is the sort of shape graph that we all like to see in any business. So from 2010 to 2015, you can see that the steepness of that graph. And it's gone from 450 million only a few years ago to 1.1 billion in 2015. So it's a very, very rapidly growing area, and covering many sectors, but as every month goes by almost, it covers more sectors in more ways. So it isn't just that the take-up of it is growing, it is like any rapidly emerging technology, it's how it grows. So think of social media, if you will. Social media started with one little part, and then it grew to a different part, and then you have all of the other aspects of social media, and everybody's doing things in a slightly different way. And that's exactly the case with FinTech. It's a revolution, it's really big. We saw earlier about the investment in Facebook that went from 7.2 billion, I think it was, sorry, 7.2 million, I think it was, to 7 billion in the space of 9 or 10 years. And that's the sort of thing that FinTech is going to be representing also. So it's a revolution just along the same sort of lines as social media was, but in the financial world rather than the more social world. But it's already made massive changes in the traditional value formation change. As I said, you'll see later on in the presentation that it's impacting so many different ways. Some of it obviously, and some of it just behind the scenes. But we will go through those in a while. So, again, phenomenal growth. Whichever number you care to look at, whichever way you want to look at it, global investment in FinTech has grown from 930 million in 2008 to 2.9 billion in 2013. But as you saw from the chart earlier on, 2013 was history. It was many years ago, and the charts just get steeper and steeper, and the numbers get bigger and bigger as the years go on. So, based on this is taken from a slightly older report, but even at this time, the projection was in 2013 it was 3 billion, in 2018 7-8 billion. And those projections are proving to be right, without a doubt. So, what are the growth drivers? Why is this happening? Really, I think it's high growth in areas, e-commerce, especially in mobile commerce. It's high growth in the emerging economies. In many countries, so if you cast your mind back to mobile telephones, we in the West had mobile telephones, and they started with the big, chunky, analog mobile phones that were just mobile phones. And then along came digital mobile phones. And we were caught with the analog systems, and so it took a lot of time and a lot of money to actually change from one system to the next. And just like that, the countries that hadn't had the analog mobile phones went straight into digital mobile phones, it is exactly the same with FinTech. So the emerging economies that don't have the same infrastructure in finance that some of the more developed economies have, those emerging economies can sort of leapfrog in many ways. So Asia and Africa are going straight into FinTech without having to go through the more traditional route in the same sort of ways. It's the distribution of new models and monetization of that, pay-per-use, a software as service, all of those different aspects of it. And it's the easing of regulators in several countries for many FinTech providers. FinTech isn't regulated in the majority of countries in the same way as traditional banking. We'll come back to that a bit later because it's changing. Of course, it's changing. But at the moment, there are still many, many possibilities in FinTech that aren't available because of the different regulatory approach. And it's the high scalability. You can have a virtual or electronic platform, and it is so easy to scale. If you're back in the traditional methods of old-fashioned banking or whatever, where you had a branch network, scalability, yeah, it's possible, but it takes a much longer time to have the fixed assets and to grow that. Whereas scalability of something electronic, of something virtual, is actually much, much easier, much quicker. And it takes investment, but not on the same sort of scale. And so the advantages of all of that, together with modern evolutions of things such as cloud solutions and all the other computer and data technologies, are all coming together at this time to actually make things possible that just weren't possible a few years ago. So what are the major uses? I've already suggested quite a lot of them, but if we just look at some of the obvious ones, you've got payments and money transfer. You've got lending, and lending in a very specific form, and this is crowdfunding. So it's person-to-person, it's peer-to-peer lending. It's not just the traditional method of people putting money in a bank and a bank lending to people. And that's actually revolutionizing the lending market because, again, it allows many individuals, many small and medium-sized enterprises to obtain loans that haven't traditionally been able to. And it also enables lots of different versions of that. Again, a whole section later on peer-to-peer lending. And then there's insurance or personal finance. There's real estate and retail banking. And a lot of this is done with electronic money transfers. Cryptocurrencies, we've already heard about a little today. And the way that works, the way that moves is through something called a blockchain, where it all comes together and it's all moved virtually. So FinTech is operating behind the scenes in things like blockchains, but it's also operating very much in front of everybody in terms of payments and money transfer. So a lot of these, again, there's some more specific detail a little later on. And again, I guess the one that sweeps up a lot of the others is number 8 down here in the corner. So markets and exchange and data. Because at the root of all of this is data. One way or another, its data transfer enables FinTech to progress and happen. So the market structure. It's based around, well, companies in every possible form. But there are many different types of players, and they all play different parts of this revolution. So you have payments providers, you have the software. And again, the software manufacturers, they might not be involved necessarily in the shop front, as it were, but they're very much involved in the back office. You've got the platforms, and a lot of this is, again, the platforms that enable people and businesses to take advantage of FinTech. And then again, you've got the data and analytics. So this information is taken from PricewaterhouseCoopers. But if you look at all of the big institutions that are involved in the financial world, involved in the business consulting world, everybody now has a very, very big focus on FinTech. Everybody is beginning to realize, or has realized a few years ago, that you cannot ignore this. All of these different things coming together are so important to the way that every one of us in this room is going to be conducting business in the future, that it just cannot be ignored. And I think perhaps the most important aspect of what I've just said is not just that it's going to change how you do things, it's going to give you many more opportunities to do things and many more opportunities to make money. And the reality of life is, if you don't, somebody else will. And I always feel, as a businessman, as a banker, I always feel that business is rather like an aeroplane, if you will. So unless it is moving forward, it will drop out of the sky. Unless your business, your financial business, your corporate, whatever it happens to be, unless your business is moving forward, it will drop out of the sky. And the way to move forward at the moment, without doubt, is FinTech in one form or another. So what are the trends? This is well, trends by definition are the way things are going. It's become a very popular word on social media, hasn't it? What's trending? What it means is what's popular. What is the way the world is evolving? The difficulty with it, though, is the speed of progress is actually very, very fast. And so which particular trend is at the top of the pile, as it were, varies as each month certainly goes by, but sometimes as each week goes by almost. So the retreat of the banks. I mentioned earlier that one of the problems that traditional banks have in terms of changing is their very large fixed asset base. They have branches. And they also have systems that are deeply embedded in them. They have thousands of staff, very structured systems. You apply for a loan, it goes through a big process. I actually started my career as a bank analyst, so analysing companies wanting to borrow money. And it's a very slow, detailed process, analysing 5 years' worth of accounts and projections into the future and what the business will do and what the market might do, etc., etc. But FinTech allows a very, very different approach to that. But much more to the point, the businesses that are really taking advantage and driving FinTech forward have a very different approach, and that's the most important thing. They're looking at things and using the data in a very different way. So they're not held back by the fixed assets, they're not held back by the fixed views. So the banks are finding it very difficult to keep up and to sort of change their mindset as well as to change their business model. You see that in the use of multiple channels. So most of us have many, many different ways into, yes, the banks. You can use your telephone banking or your mobile phone or whatever it happens to be. So yes, the banks are adapting, but not quickly enough. So what FinTech is able to do is actually largely to do away with the banks or the traditional banks and provide these systems without that. But again, because it's a different approach, it's a much faster approach. You also get a new type of investor that are interested in working with people and finding their solutions. Again, once you've got a big historic business, a bank, an insurance company, they've all got these models. So their sort of approach is very much a case of, okay, so how can we adapt because that's what the people want? But actually what they're trying to do is to make their business work. What the new FinTech players are very interested in doing is, well, we've got a broad, empty piece of paper here. So what do the people want? What do you want? What do you want? How can we help you? And then taking that back and then designing something to help what is actually wanted, as opposed to the bank stance where, well, this is what we've got and this is what we really want to deliver, but I suppose we'll change it a little bit because you want something slightly different. So again, it's a totally different approach. And there's a whole new set of partnerships evolving as well, between banks, between corporates, between venture capitalists, and you're seeing mergers of interest in cooperating, because many of the banks are beginning to realize actually they're going to lose out unless they work with somebody because they just don't have the expertise of their own. So some of the major new steps, as it were, in FinTech is banking technology. As we've said, there is a big shift in any event towards technology. Payments innovation is one of the biggest. There are many, many new ways of payment and modernization of payment models. So to use one example, Kenya. So most people wouldn't put Kenya on the map as being the sort of most advanced financial player in the market. They developed a system called M-Pesa, which many of you might have heard of. So many people in Kenya did not have banks. They had no access to banks. There simply weren't the branches. They didn't have ability in any way. So a system has developed where basically you use your phone as a bank. So everybody can transfer money. I can transfer money to somebody in Kenya on their mobile phone. They can take their mobile phone to any one of tens of thousands of little shacks in the middle of the desert somewhere. I'm not exaggerating. It's really true. And they can take money off their phone. They present the phone, and it's something like a corner shop, as it were, can provide you with cash. And so money is transferred all over the place, and it's totally revolutionized the financial sector in Kenya. And M-Pesa has now spread to about 6 or 7 other countries, and it's growing rapidly. And it's a perfect example of how somebody has looked at a real problem that people have and taken it forward. So that's sort of, it's the banking technology, but it's also a payments innovation. The next step on from that really is cyber currency, virtual currency, Bitcoin and the like. And that again is something that when it started some years ago, people sort of almost wrote off as, well, nobody owns it, nobody controls it, quite how does this work? But it's gathering traction, and we have some statistics on that a little later. Business finance. One of the most difficult areas to raise funding always is a startup business. Normally banks look at financing businesses and have you got 3 years worth of accounts, can you provide personal guarantees, etc. Again, using FinTech, different approach. Banks are not able to provide loans in the same way that using different forms of FinTech are. And likewise for individuals and consumer finance. And not only is it quicker and easier, but the whole system is geared around the person. So, unicorns. First of all, for those of you that aren't aware, I should explain what a unicorn is. So a unicorn is a business that is valued at $1 billion US. I know this is one of those slides that's rather detailed, but around this area, are lots of different company names, all of which are unicorns. And they come from different parts of the FinTech world, so personal finance, real estate, insurance, and the like. One of the things to note, and again we'll see it in some of the details later on, is 42% of unicorns are in the borrowing and the loan sector, and 32% lay in payments. So there's a very clear area of specific interest. But if we look at one of these, so the lending club, right up at the top under loans. So the lending club is the largest person-to-person, peer-to-peer lender in the world. It's based in the States. But by the end of 2016, it had lent $24.6 billion US from a startup I think it was 2008 or so fairly slow to begin with, but then that exponential growth. But to be delivering $25 billion of loans is a massive example of how businesses, if you get them right and you use the technology that's available, can go. And this is online lending, and the decisions are made in minutes. You go online, you get the answer, you get your money, instant. And they provide all the same safety and all the same safety benefits of using a bank. And another one maybe is Coinbase, which is the world's largest market to buy and sell Bitcoin, for example. And they have traded now, or should I say their customers have traded now on this platform, $6 billion traded in 33 countries. And it's a mobile wallet, if you will. But they now have 6.3 million customers. And that's not the sort of thing you do by opening bank branches. So another of those slides where lots of pictures and perhaps difficult to read from the back. But I think what it displays is that there are more and more companies in every part of FinTech. So if you can't see the company names, just look at the headings: mobile payments, capital investments, banking and corporate systems, big data, Bitcoin, blockchain, all of the ones that we're already seeing coming through. And the numbers of deals being done by the market-leading venture capitals in FinTech are growing exponentially also. So on the very left-hand side, oh, wrong button, sorry. On the very left-hand side here, you have the venture capital firms that have invested, and then the table going further across shows you which companies they have invested in. So if you look, you will find many that have invested, say, in the same business, so co-investors, but in the same business. So it's showing that, again, there's a lot of co-investment between venture capital houses in businesses, but it is showing the ones at the very top. So Spark Capital is the one at the top, having invested in many, many businesses. And the number of businesses that they're investing in and the size of individual investments is growing all the time as well. Again, lots of different statistics. On this slide, it actually says that the average investment is $50 million. but in Series A, it's $6 million. But you'll see later on, investment into the business is much, much bigger than that. So there is exponential growth, but you can see from this it has its ups and downs. As it happens in Q4 2015, there was a failed IPO, which explains why that dip. But nevertheless, it is a massively growing market, and the potential to get it right is fabulous. So what are the world's largest deals? You'll see from that that it's worldwide. So yes, you've got the old established markets of the United States, little in Canada, UK, Europe. But interestingly, you've got a lot of growth in Asia, which is what I was saying before. It isn't just the established financial markets, it's the up-and-coming markets. And they all have different things to bring, and there's details later which will help you to understand why some of these different markets are sort of growing in different ways. But on here, the number one deal is in the States, and it raised $1 billion US. So it doesn't tend to be in Europe where the largest transactions are. It does tend to be in the States and in Asia. But nevertheless, lots of different markets and lots of different deals, and has everything growing all the time. So this again shows you the very dominant sectors. The laser doesn't seem to show too well here, but you can see that on a darker background. So according to these numbers, this is showing lending at 29%, payments at 27%. The number of unicorns, companies worth more than 1 billion, they are the two big sectors that are represented. And then where are the investments going? So again, it's finance and lending, it's processing payments, and then it's mobile wallet. So again, all of the same sort of areas that I've talked about, and it's the same story. Whichever way you want to do it, whichever way you want to analyze the figures, they may come out slightly differently, but broadly the picture is the same. You can see the trend, you can see where people are really making FinTech work, and it is having the biggest impacts. So a rather complicated picture on the right-hand side. But again, what it's trying to show is that young, innovative startups pose a threat to the traditional banking system. So what is happening is a number of banks, very specifically Citigroup, Goldman Sachs, Morgan Stanley, JP Morgan, are investing in lots of companies because they do not want to be left behind. And they can be investing for one of two reasons. They can be investing either because they want to gain that expertise and bring that expertise in-house so that they can use that to help develop their own FinTech systems, or they can be investing purely because they've seen the potential of massive growth for those investments, again, as we saw with Facebook earlier on. So this is showing, though, that a lot of those banks are investing in a lot of the same companies. So again, co-financing, co-investment in one form or another. But again, I mentioned earlier, when I first mentioned co-financing, it isn't just the VCs that are co-financing with one another, or just the banks. It's got a very sort of messy world out there nowadays, because what's a bank, what isn't a bank, what's a VC, what's a corporate, has become much more muddled than it used to be. So if you look at Amazon could be classed as one of the biggest unicorns of all time. if you looked at it in the way that it is, because yes, it's a retail operation, but it's only where it is because of the sophisticated nature of its databases and the whole way it processes everything. But they've now become so big, they want to invest along with the banks in lots of other things. So many of the corporates, but specifically the corporates from Silicon Valley, for example, are the ones that are investing. So again, Google, exactly the same, another of the very early sort of mega unicorns, if you will. And the reason they're investing is they have an ingrown advantage. They have built their business from start. They understand the importance of cloud-based technology in general, much better than many of the more traditional investors. Because whilst the traditional investors might see the opportunities, they don't necessarily get the detailed knowledge that the likes of Google and the other Silicon Valley companies have. And on another front, what we're finding is FinTech is growing so rapidly that you're getting a whole number of different cooperations. So I know it was mentioned something earlier about me being in the accounting world, but you can get lots of instances where 2 + 2 = 5, or 2 + 2 + 2 = 9. And by that, I mean, if you try and do something by yourself, maybe you can achieve this. But if you merge with somebody else, merge in a cooperation or an association, not necessarily merge the business, but if you work together, and instead of doing this by yourself and them doing this by themselves, maybe you can achieve this by merging what you're doing together. And this is some of the things that are going on here. So you have an online bank and you have online lending. Or you have online remittances and a mobile bank. So you have companies that have become experts in their little world, but they recognize that by working with other businesses offering related services, actually between them, they can really take on the banks and the other financial players without actually needing them at all, simply by replacing them by the different activities that they're doing. And again, this is what this is trying to show is that, well, PayPal started out as a payment service, but then, so the orange line for PayPal comes along, and it's now in online acquisition and SME loans and P2P remittances. So sometimes they simply work with others. Sometimes the bigger, more successful ones actually broaden their services and activities, and they think, well, we're doing this, we've already got a good database, we've already got a lot of good knowledge, so let us broaden that out into doing something else. So Square in the top left-hand corner actually again is involved in 4 different sectors. So again, it's just the speed of change. They are the ones that are recognizing the need to get in there and to do something fairly quickly. Payment systems. It's one way or another one of the most important sectors, as we've said. So between 2010 and 2015, there was a 4-fold increase in the number of payments sent using FinTech. And that rate of growth is still growing very, very rapidly. So part of that, admittedly, is the presence of the tech giants, so Google and Apple and Facebook in the FinTech market. So these companies have developed their own payment systems. So with an iPhone now, you can pay simply with your iPhone as opposed to having to go through a bank. So some of that growth is explained by that, but a lot of it is totally separate to that. But I think one of the really big growths, or the reasons for the growth, is younger people. So you look at children now. I'm old enough that I grew up, mobile phone? What's a mobile phone? I very much remember when I worked for a bank, the bank had 2 phones. And I was in one car with a big mobile phone, and a colleague was in another car with a big mobile phone. And we thought it was fantastic that you could phone between cars and sort of, where are you? Will you be long? Whereas now everybody here's got 2 phones, one in your left pocket and one in your right pocket, or whatever it happens to be. So the world is changing. But you look at children. If I don't understand something on my mobile phone or my iPad or whatever, I say to my 19-year-old daughter, can you do that? And boop, and it's done, because they've grown up with it. And you look at children this big now, and they seem to, well, I don't know, it seems to be hardwired into them now. And using that growth, they expect different things, and rightly so. So they're more engaged in payment applications using their phones. For us, well, I say us, people of my age, it's revolutionary to be able to get a message and say, oh, can you transfer some money to somebody? And you say, oh, I'll do it on my phone. Whereas that's the first way that my daughters would think of doing it. Simply, yeah. Whereas I might still think perhaps of going to a bank or doing it in a different way, or even getting the computer out. But it's not now. It's the younger generation demand different things. And that brings me back to what I was saying. Banks are seeing, yeah, maybe we need to be changing things. But the real movers in FinTech are totally understanding what the market wants and then providing that solution. So, again, lots of names. The payment system landscape. What I thought here would be useful to do was to just briefly pull out Bitcoin. So there's a whole little section at the top called Bitcoin payments. So these are platforms that you can trade Bitcoin on. But I mentioned earlier Bitcoin. So it's open source. Nobody really owns it. Nobody really controls it. Slightly weird concept, maybe. It started in 2008, made slow progress for the first few years, but it's the most famous cryptocurrency, classified by the US Treasury as a decentralized virtual currency. But now it has 100,000 merchants worldwide accept Bitcoin in payment. So yes, you can pay by MasterCard or Visa or Bitcoin. And the big difference is MasterCard or Visa will charge you 2 to 3% handling fee. Bitcoin will charge you probably 0%. And it's quicker. So for a merchant, it's free and it's instant. And that's a very good example of why cryptocurrencies, why FinTech is sweeping away the old way that banks and the financial world have been used to doing things. And all of these are different ways of consumers using bank credit cards and e-wallets and what have you, coming across to actually paying merchants. And what we found when this started was, in many ways, it still needed to go through a bank. It still needed somewhere to work with that. But with the evolution, the revolution of FinTech, what we're finding is that it's simply ending up doing away with a bank. It's using virtual technology to sort of sidestep that altogether, again, making it much quicker and much cheaper. So the payment system is sort of fairly complicated if you look at it on a flow chart, if you like that. But what I really wanted to say about this was don't look at it today and try and think, well, you know, how does that work and where does this bit go? Look at it today and think, there's an opportunity. Oh, there's an opportunity. Ah, we could do something there. The point is, whatever your business, whatever your intended business, there are lots of different areas of opportunity. It may be several areas, but it depends on what your background and what your expertise is as to what specific area. But the point is, because there are so many different aspects of this process, there are so many different opportunities. And again, I've already mentioned mobile phones, iPads as a way of starting the process. And this again sort of shows it going through a bank-type system in the middle and coming out to the merchants at the end. But as I've already said, really, you can do either. You can mix the old and the new, or increasingly, it's simply the new moving the old to one side. So, there are many different innovative solutions. I guess you could say that all of them are quicker, safer, and easier for everybody involved. The traditional banking system cannot survive alone. The reason that we've seen the Citibanks, the JP Morgans, the Goldman Sachs, all of those sort of banks investing billions in the sector is because they've already woken up to the idea that they cannot survive alone. I don't know, again, another slightly strange analogy, but go back to when the car was invented. It's no good trying to keep your horse and just make some slightly nicer shoes for it so that it runs a little bit faster. If the world's moving towards cars, then you're going to be left behind. You need to come up with a car, not try and keep the old model of the horse and just make it look slightly nicer. So that's, I think, where we are with banking and FinTech. And the smart banks are recognizing that. And they're going about it in different ways, but one way or another, they're recognizing that. And I just wanted to pick out a couple of these here. So, international payment issues. So, with banks, you've got to rely on international payments systems of a bank at this end and a bank at that end, and a central bank at this end and a central bank at that end, and maybe a currency control at this end or at that end. And then how long it takes, how slow it is, what the costs involved are. I recently transferred some money to a country that ended up being a complete nightmare simply because my name wasn't quite right. So it had come from my account, and there was no doubt it was from my account. Just one part of my name was slightly wrong, and the bank the other end kicked it out, and it went backwards and forwards for weeks and cost charges every time. That doesn't happen with FinTech. So the use of technological solutions makes the system less expensive and more available. So lots of different examples up here at Zoom that was bought by PayPal, but lots of others here. Payments via Facebook Messenger or Snapchat or Money Talk, Apple Pay, Google Wallet. All of these things are just quicker, faster ways. And again, I mentioned Kenya. It doesn't matter what my name is. I put money through World Remit in this case, and that whizzed it onto to the person's mobile phone in Kenya. Quick, easy, cheap or almost cheap. Again, a fairly detailed slide. I think really all I wanted to mention on this one was it's a continuously evolving process. I don't want to go through the various points here, but the way the system is evolving is constantly changing as the FinTech players are finding ever better, quicker, safer, cheaper ways of doing business. And again, it's that aeroplane moving forward. If you don't keep up with it, somebody else will be, and that will be knocking you out of the sky. So, digital payments. At first sight, so the dark blue line is 2015, the light blue line is 2020 as an estimate. So at first sight, it's showing you online payments as 94% in 2015 and reducing to 65% in 2020. And at first sight, when you look at that statistic, it may seem a little confusing. But what it's actually showing you is all of these down beneath it, and it's showing you that mobile wallet payments, online P2P money transfer, business lending platforms, crowdfunding, etc., are all growing rapidly. So what is happening is online payments overall, all of these are digital payments, and it's taking an ever larger part of that market. So digital payments are the way to go, and will continue to do so. So if that was to be projected further out, again, they would be much further out. The light blue line at the top would be much closer. Again, numbers. We sort of keep coming back to numbers. But if you look at this bar chart here, again, one of those nice bar charts that everybody wants to see their business doing, growing 15 to 20% a year on year. Estimated 2020 to be a 5 billion. So this is simply the market size of transactions. So it's the growth in FinTech payment sector. And again, it gives you an idea for where those biggest markets are. So 770,000 million in the United States, then China, then the UK. But again, I think the thing to take from that is look at that growth and how rapidly it is continuing to climb. So, lending, we've mentioned as one of the biggest sectors. Again, if I pick one of these from here, Funding Circle. Funding Circle is the UK's largest peer-to-peer online lending. So it raised in 2015 $150 million from investors. And in 2015, that made it the largest raise for a UK-based company. And that has grown, even the UK government has put money into that, because they recognise that it is performing a task that the banks are not. It is performing a task that allows small businesses, start-up businesses, to obtain funding that the banks are simply not interested in. So again, they're using FinTech, they've recognised a hole in the market in how to go about it, but they've also recognised a hole in the market as to what is wanted by those potential clients. So they've married those two things up, and they're providing an ever bigger sector of the market. And one of the drivers behind that, it's true, is the low interest rates. So the low interest rates in the West has meant that individual investors are looking, so what do we do with our money? There's no point in putting it in a bank because we get nothing. Maybe we think the stock markets are a little bit too exciting for us. So they're looking at what they can do. So many normal people are actually putting money into funding circle type platforms, and that money is then being on-lent to a whole series of other companies. So if they're doing it sensibly, they're putting in, I don't know, 30,000 and investing in 10 companies, so that they're balancing their risks, so that if one fails, that they haven't lost everything. But the point is, the low interest rates have driven that, and they're getting a much, much better return. So there's, again, a whole marriage of different drivers behind why this is growing so well. But certainly low interest rates is one of those. But again, it's effectively cutting out the middleman, where the banks obviously have a difference between what they pay deposits and what they charge lenders. Oh, I'm sorry. So, banks and FinTech. I touched upon earlier the regulatory environment. Banks are, rightly, fairly tightly regulated throughout the world. At the moment, FinTech lenders have a much easier ride. But it's inevitable as those lenders get bigger, as they play a more important part in the market, it's inevitable that the regulation will become tighter. We've already seen that. So we've seen it from the regulator itself enforcing tighter regulation, but you've also seen it from some of the big players like Funding Circle, actually, if you like, volunteering to be more tightly regulated, because they see it as a way of proving that they're a sensible financial institution, and therefore encouraging people to trust in it. But nevertheless, they're often much less tightly regulated, and certainly they're not, many of these players are not deposit-taking institutions in the same way, so again, they don't get regulated in the same way. But P2P lending avoids traditional credit scoring. You all have a credit history, and from that comes your score. Experian, one of the biggest in the world, has you get a number up to 999, and depending on what number you're at will depend on how you're seen by the banks and other lenders, whether you're a good risk or a very good risk or maybe a poor risk. And obviously different players are in different parts of the market, but it does, of course, affect what it is you're able to borrow. But the banks have a very set model. If you've got a credit score of 610 out of 999, you may just get a no, not interested, go away, don't want to do business with you. Whereas FinTech lenders have a very different model and a very different approach. They actually often have models that look at your social media profiles and try and get a much better understanding of you as a person as to your approach to life and how it works. So detailed algorithms working away in the background, but a different approach. So it may be that you don't get you're not able to obtain a loan at all from a traditional method, but you can through from these sort of methods. The other big thing, again, is speed of response. Banks will take a long time. If it takes a long time normally, as soon as there are more detailed questions, you go backwards and forwards, whereas the various FinTech models get over that. So there's a whole range of other ones here. I've just picked on pressure of credit history as one. I think maybe another one is awareness of the consumer near the top. Again, it talks about what is the consumer actually wanting? How can we make a product that the consumer wants, as opposed to squeezing the consumer into what we want as a lending institution? So it's coming at things from the other end almost. In almost every part of the financial world, there's alternative ways of doing things. So again, if you look at this, whether it's merchant cash advance or peer-to-peer lending or direct lenders or crowdfunding, whatever sector you're involved with or could be involved with, there are so many different opportunities, whether you're a provider of a platform or a builder of software or an investor. Again, just so many different opportunities. Perhaps the difficult thing is to try and hold on to the tail of this tiger, because it's rushing away so quickly. It's always a challenge to keep up. But as a small, fast-moving entity, that is so much easier. I guess this one here probably has more corporates on it than any of the others. Again, same sort of message, I guess. Broker, direct lender, crowdfunding, charitable causes, whichever way you want to look at it. More and more companies are involved in more and more sectors in every possible aspect of that sector. And this was really just intended to make you understand, if you don't already, that it isn't just a few companies out there. It's not just the companies you've heard of. It's hundreds of companies. And it's now an extremely important, P2P is now an extremely important sector in every possible way. Without FinTech, it wouldn't exist. Without FinTech, this type of lending just would not be possible. It would not have grown from zero to the massive size that it is that we've seen today. And it's revolutionized investing for small investors, as I mentioned earlier, because an old lady might put her £30,000 into lots of different companies and earn 5 times the return that she would from a traditional bank, but she might be scared from investing in the stock market. So there's different advantages whether you're an investor or whether you're the actual provider of the FinTech service. But the real revolution in P2P lending, as I've already said, is that it is that SMEs and people are able to borrow that wouldn't otherwise be able to. There are, of course, lots of different competitors. This gives you an example of 3 different competitors in the US market. Again, it shows that some are involved in different parts. We've already mentioned Lending Club, but issued $5 billion worth of loans. The next biggest, I think, but the oldest, is Prosper with $2 billion. But if you look down at the one below, borrower's profile. So Upstart very much focuses on young borrowers with it says minimum, but with a not so good credit history. So just like any normal business, which part of the sector do you want and how are you going to go about it? But again, it just gives you so many more opportunities to identify that and then find the product that really works. Insurance, just like I've mentioned with P2P lending, is another large sector, but where many types of insurance would simply not exist without FinTech. So things like pay per mile on your car, where you have a little box in your car that tells the insurer how many miles you've driven or whether you've driven well or not, or whatever it happens to be. And also many health insurance products where they're linked to your phone or they're linked to a watch, and it's linked that constantly monitors your heartbeat or what have you, or even just simple things like how active you've been. So some of those insurance products are very much tied into that technology, and that enables you to get insurance where you might not otherwise be able to, or to bring the cost of that insurance down. So again, as I've said, you might not necessarily be aware of how FinTech is playing a huge part in all of our lives, but it is in just every possible way you might imagine. So many of the startups are in the health sector, health insurance sector, as I say, linked to exercise or continuous medical reports. And so as many of those startups are in that sector, the investors are also recognizing those benefits. And soon, well, no, I say soon, it is possible that if you have certain medical conditions, just on this little part on the back of your phone, you can already take your pulse and your blood count and all this sort of stuff and send it to your doctor, and all of that is linked to the insurance market, which makes it possible. Blockchains. So I'm not going to go into detail, but blockchains are the core of payments, FinTech payments. So again, so that you understand it's not just new small companies that are getting into blockchains, over 40 of the world's leading banks are already working in some way with blockchains. And that includes HSBC, Citibank, Deutsche, Credit Suisse, Goldman Sachs. All of those big sort of names have realized they need to be playing in this game, because otherwise, sooner or later, it's all going to go horribly wrong for them. But a blockchain is a specialized distribution system. It's a database, it stores information, it's extremely safe, and it's encrypted, and it basically allows the transfer of payment from one source to another source. IBM estimate that blockchains will reduce the cost of infrastructure by £20 billion a year very soon. That's a huge amount of money just by doing something in a different sort of way. $20 billion a year. So what happens very, very briefly is a separate, unique part is added to other parts of the chain. So you make a payment, it's a unique part, it's added to other parts, and then the chain sort of moves along. But as I've said, these slides are available afterwards for people that want to maybe sit at your desk and try and understand it in a bit more detail. And again, there's some useful websites and what have you that might help you do that if it's a topic you want to look at more. But again, blockchains are being used increasingly in every aspect of finance. So I keep mentioning payments, but blockchains are used in all of these different sectors of FinTech. So trading platforms, compliance, payroll and insurance, smart contracts. So all of these areas, again, it's the back office part that you don't see, but it's a very, very crucial, very core part of it. And the investment in Bitcoin, I said it hasn't really existed terribly long. But look, 2011, 2012, non-existent. Leveled off a little in 2015. But 2016, 2017, it's back doing that again. I know I keep saying it, but exponential is the word that keeps coming to mind when you're talking about FinTech. The growth is just constantly growing. So, again, a very detailed slide. Really what this is showing is that blockchains are used in many, many non-financial uses. I guess all of these can be summed up by the fact that it's smart contracts. So it's simply a way of being extremely safe way of exchanging data and controlling data. So provides digital identity that protects consumer privacy, or escrow accounts, or decentralized IT, or digitalization of documents, contracts, and proof of ownership. So all of those sort of things use blockchains. So, where is the investment? We mentioned earlier, but this shows it in a slightly different way. Broadly, in, I guess, three main sectors. The US, Europe, but focused around the UK, and Asia, but with some other sectors that are actually growing, and some that are not growing very much at all. We'll look at those in a little more detail in just a moment. So, by far the leader that you saw on that map, so the US is by far the leader. And the reason is Silicon Valley. And the reason there is the technology. It is these companies that are, it's the center of the technology world. It's these guys that are dreaming up that technology, how to use it. And it's such a good incubator for companies that are wanting to start up. So even if they don't originate from there, if you want to go and get the right staff, you want to set up, that's the place to be going. So that is the reason that that coast of America is the world leader. Next up is New York, so the other side of the US, of course. And the reason for New York is because that's the financial service sector of the US, where the Silicon Valley tech guys are. So a lot of the deals that are maybe dreamt up in Silicon Valley come through New York. But overall, those two parts make the US a very major player. And to put some real numbers on that, this shows you the 10 largest deals in the US in 2015. And that very large circle over on the left-hand side is 1.35 billion was raised by one company in 2015, admittedly in a series of different investment rounds, but 1.35 billion for one company is huge. So all of those are down in Silicon Valley, and then these are down in New York. Canada is not a leader by any means, but again, it's just showing, I wouldn't, but so apologies for any Canadians, but I wouldn't put Canada as sort of a leader necessarily of FinTech or finance, but it just shows you everywhere, every country is doing something in the region, and some of these are very big names. So it really is sort of spreading everywhere. So the next section, the next biggest, one of the three, should I say, big regions is Europe, but very specifically two sectors. London firstly, Berlin second. And that is because London is the world's financial center, and Berlin has very many leading programmers and software developers. So again, two different reasons, but nevertheless they are the reasons, and that's the reason that Europe is sort of playing such a role, and the UK in particular is playing such a role, simply because of its financial expertise. Eastern Europe and Russia are again, to some extent, playing catch-up, slightly different regulatory issues, but again, it's happening. All of these things are moving forward in different ways. Every country faces its own challenge and its own opportunities. Wherever there's a challenge, there is an opportunity. You just need to be smart enough to find out how to make that work. So the 10 largest deals in Europe, I mentioned earlier Funding Circle. So Funding Circle is this largest one here at 150 million. But again, it shows them being sort of centred around London and the UK, and then some others. Asia, again, I mentioned at the very outset, they've got an advantage in that they don't have the same, that sort of leapfrogged the more developed world maybe, in that they've got massive resources now to throw at technology. Again, massive deal here, 1.25 billion in India. And all of the others, big deals coming out of China. But India and China, so again, India has a lot of the programmers, China has a lot of the technology. One of the other benefits in India is not just that they have the programmers, but they also have quite weak banks. So again, it's an easier market for FinTech to take over. They haven't got the same sort of competition. So a little like Kenya maybe. There aren't the banks there, so let's come up with a system that we can do something and help people look at. So I've tried today to, I know there was a lot of information and I apologise for that, but again, you can get all of that later. But I've tried today to get across that it's growing exponentially. I think I've said that 10 or 20 times, but it is. FinTech is coming. It's here now, but it's growing even bigger. You really do need to get involved with it one way or another, because you can't ignore it. And if you don't work with it, somebody else will be, and you'll be losing out. And there really are, wherever there's a problem in what the system is at the moment, there's an opportunity for you or somebody else. So I really hope that I've given you a bit more of an insight and maybe a bit more enthusiasm to think, you know what, this really is something that I should be getting involved with. So thank you for your time, and speak to you later.
Ladies and gentlemen, Mr. Kevin Smith. Thank you, Kevin. Thank you. How are you? You good? All right, before we break for lunch, you know, one of the most important things for any successful team is to have unity and rhythm, correct? Yes or no? So let me see. I want you to clap with me, but I want everybody to have this one rhythm. Okay, you ready? Okay, so this is what you do. Ta ta e. No, wait. This is like, no. Okay, let's do it one more time and then we break for lunch, okay? On my count, 1, 2, 3. Ta ta e, tak, tak, tak. I think we'll do that later. I think you're hungry. Are you hungry? Yes? All right, we're going to have a lunch break for 1 hour. When we come back, the next speech is a very important speech. It's about how to create your own bank, the Atlantic Global Bank. Don't go away. Lunch is served right at the back. Okay? We'll be back in 1 hour. All right? Enjoy your lunch and we'll see you later. Thank you very much, ladies and gentlemen. Okay, I hope you all had a good lunch. I hope you had a very good lunch. We're going to continue with the program at the moment. Our next speaker is actually the shareholder and investor of the Atlantic Global Bank. He is also the co-owner and the fund manager in Holland, Capital PIPV from the Netherlands. Ladies and gentlemen, please put your hands together for Mr. Alexei Stotschish.
Dear ladies and gentlemen, do you hear me? Okay. Sorry. Dear ladies and gentlemen, no? Hello? Okay. Dear ladies and gentlemen, it's big pleasure to be here today with you. Thank you for invitation. I'm glad to introduce the new financial project for Atlantic Global Asset Management, Atlantic Global Bank. The bank is specially created for Atlantic Global Asset Management, specially created for every one of you. It will be your bank. Thank you. And to go deeply through the details, we have a special guest, old friend of mine, well known, Kevin Smith. Kevin, the stage is yours.
Good afternoon. So I guess I should start with this time. I was always told never apologize when you're doing a presentation, okay? But I'm going to start with 3 apologies. 1, you've got me again, I'm sorry. 2, I know you've just had a nice lunch and it's nice and good to have a little doze afterwards, so I'm going to try and keep you awake. And thirdly, we're also running a bit late today as well, so I know about that, but again, this presentation, this bank, your bank, Atlantic Global Asset Management's bank, will really, I guess, keep you interested and help you understand where it is that we're going. So, I think it was mentioned in the first presentation this morning that Atlantic Global Bank is one of the major ways that AGAM plans to develop over the next 5 years and beyond. It's an important step, and you'll see more, I hope, about how that sort of blends in with the whole approach. And it will also tie in with many of the aspects that I was speaking about earlier, about FinTech. So, we've already established from the FinTech presentation earlier, it's a very fast-changing world, and the speed of change just seems to get faster and faster and faster. If you look at any 10-year period over the last century, whichever 10-year period you look at, the next 10-year period, the progress is faster and faster. And it's now come to the extent, we're back to this exponential curve that I spoke about earlier. The speed of change is so rapid, and we have to keep up with that. And I was saying that the smart players in the financial world have understood that and are doing something about it. AGAM understand that and is doing something about it. So we need to find our place in the world. Robots are taking over from people in many different ways, whether it's proper robots or it's just sort of machines, whether it's in factories or whether it's in domestic cleaning type activities or whatever. Modern megacities and special places like the Palm are sort of growing amongst the desert, and artificial islands are being created, and all of these things that nobody would have dreamt was possible just a few years ago. New generations, I mentioned earlier about sort of my children, your children, have a different expectation in life about what is possible and what should be possible. And if it's not possible, well, make it possible. It's no longer acceptable just to say, sorry, it can't be done. And businesses need to be flexible, and they need to look at the challenges, and they need to have that extra edge on performance in order to beat their rivals and to continue to grow. So again, just like the last presentation, this presentation has quite a lot of detail in it. So again, I'm going to go through and give you the overview, but you can ask the organisers afterwards for the actual presentation, and then you can look at some of the detail should you wish to do so. But I hope my presentation now will give that balance between enough detail but not too much. So, the world economy. Obviously, different countries, different regions of the world all grow at different times. And yet, what we've seen already is that many emerging economies are growing more rapidly. And that's because in many ways they have the advantage of not having to throw out the old, they can just bring in the new. But also, there's a sense of catch-up. They can see the more developed economies here, and maybe they're here, and so that whilst the older economies are still growing, the new economies are having to grow that much faster in order to catch up. So we're seeing a lot of different focuses, albeit that some of the newer economies are a bit more prone to financial shock. But if we look, again, just at some of these numbers, and that sort of underlines what I've just said. So world output is somewhere around the 3.4% growth, according to the IMF. Whereas the 3.4% is a global outlook. If you look at the more advanced economies, they're 1.8%. And if you look at the emerging economies, they're 4.6%. So again, there's lots of disparities between which particular country you might look at in either of those two sectors, but broadly, there's a lot of growth amongst the newer economies, and therefore, there's a lot of opportunities there also. So, these next few slides do provide more detail on some of the obvious economies. The UK, okay, I guess it's first and I'm English, but that's sort of coincidence. But the UK is a major financial world player. And then the US and the Eurozone. And then we have more detailed information on China and Latin America and some of the other economies. So I won't go through those in detail, but you get the picture that they're all growing at different paces, but in general, the emerging economies are growing that much faster. So, what are the challenges in setting up a bank? Why are we setting up a bank? What are the challenges that we are going to face? And more importantly, if you think back to the whole different approach with FinTech, that different approach being not, well, what are we doing, what do we want to do, and how do we make you customers possibly fit with what we want to do? It's a case of how do we understand what you as customers want, and how can we deliver that? And that's the biggest challenge, and that's what we're wanting to try and achieve. So those different challenges, though, I keep saying, bring many new opportunities. And those new opportunities are for many players, but the ones that will be most successful are those that are most flexible and have the most modern business model, the most flexible, the most FinTech-minded business model, rather than the old-school business model. So to pick on some of these, we've got the technologies are developing rapidly. We've got the younger generation that I've mentioned before, just showing a very different behavior, a different set of expectations, if you will. You've got the fact that the banks themselves, went to, shall I use the microphone? Okay. Are we back on? Yes? Okay. It is on? Hello. Hello? Okay. So, I knew the first one went too smoothly. So, the banks. The banks themselves have accepted that they can't rely on traditional payments channels. Interest rates are at a historic low. Non-financial institutions, so NBFIs, non-bank financial institutions, are demonstrating better adaptability. And you're seeing that in very specific sectors of the market. So lending to micro and small and medium-sized enterprises where non-bank financial institutions are really making a mark. Why? And the reason why is because they're very much focused on that different type of decision-making process, that different credit scoring process, that different approach, and a much quicker, speedier response. So it's all of these different challenges that we need to be aware of. There's no point in setting up another traditional bank just to perform the same old duties that the old banks used to. So, again, the traditional banks are just not keeping up with the pace that they need to. Some are trying, but even investing millions, billions of pounds, they're struggling because they still have what used to be considered to be a big asset for them. Their costly fixed asset infrastructure base is now seen as a big drag on them being able to change direction. But it won't be a surprise to you today, given what I've spent the last hour talking to you about, that I'm going to pick on payments and FinTech challenge. We really do believe that this is the one area that we need to focus on to do something different, to be extremely successful. So consumer preferences are rapidly changing. Retail customers now expect to be able to integrate all different types of e-commerce and social media and retail payments. So again, it's back to that whole merging your Facebook and your payments and everything else all at the same time. And they expect to be able to switch from one to the other seamlessly. Gone are the days that they want to use a bank for this and an insurance company for that and a phone for that. They're looking at doing everything all together. And by using the right FinTech platforms, we and other players can actually achieve that. So, Atlantic Global Bank. It is, as I've said, part of the AGAM larger framework. And it's going to be different. And it's going to be different in a number of ways, because it needs to be different. At the moment, you have broadly old type banks that are struggling hard to become new banks. You have many FinTech type organizations that are focusing on being FinTechs. But what we're trying to achieve, and what I'm confident we will achieve with Atlantic Global Bank, is a merger of the two. So it will merge some of the better aspects of traditional banking, but with all of the better aspects of FinTech. So first of all, it's going to have a global presence. Because of the FinTech approach, there aren't going to be any borders. So it will be able to transact business in North and South America, Europe, Asia, CIS, anywhere in the world, because of that reach of the financial technology platforms that we've mentioned at some length earlier. Its advantages as we've said, are in payments, in cryptocurrency, in lending, in brokerage services, all of those things that you're now experts in, and I will test you all on as we leave this afternoon. It's also going to provide a classic banking service, but it's going to be a special type of classic banking service. As I've said, only the best bits. We don't want to get bogged down with the older parts that didn't work so well. So, again, the primary target markets are the ones in blue, and the secondary target markets are those in green. That's not to say that we'll be ignoring the other parts, but it's simply that they are the parts of the world where the biggest and first opportunities are. So, the bank is going to be established in Grenada. And there's a number of very, very good reasons why Grenada. Some of which will be obvious to many of you, some of which perhaps might not be. I guess the most obvious one is tax, one way or another. But as well as tax, or lack of tax is the best way to describe it, there's a whole range of different reasons. So those reasons include, in that part of the Caribbean, the Eastern Caribbean, they have a very highly integrated financial service sector and economies. So it makes it not just a small island, but it makes it a bigger group of islands. They have a very progressive offshore business and banking approach. The government and everybody there is actually wanting to go out of their way to be helpful and to help us to do this. So again, unlike many of the more traditional markets, it's not a case of, oh, well, it's another bank, or well, we don't really want to help. They're actually very interested in working with us. The favourable tax policies that they have there cover almost every aspect of tax that you can imagine. A little later on, there's a slide that gives you a bit more detail on that. But again, one of the other really important aspects of why Grenada is that it gives easy access to the markets of the US and Great Britain and Latin America and other important markets for us. The legal system is based on common law, based on the English common law system. And again, I don't know how many of you have been involved in large syndicated loans or anything like that, but English common law is often the law of choice because it's a law that everybody feels comfortable with working with. So it's a very good, it may not be England, but it's based on the same legal system. I've already talked about the sort of the virtual reality of having the connections with Europe and the US, etc. But it also has extremely good direct flights to those parts of the world. So if you do want to go there for whatever reason directly, physically, it's also quite easy to get to, despite the fact it's not a large place. So, again, you can read some of the details later on, perhaps, but I think the one thing that I would draw from that is the major language. So, again, apologies for being English, but the major language is English, and English is the major language of finance worldwide. It may not be in this particular country that you come from, but in terms of worldwide finance, it's like being an airline pilot. If you want to be a commercial airline pilot, you have to speak English. And it does give such a good advantage compared to some of the other jurisdictions that you might look at setting up another bank. And then we have the economy. So it's not a massive economy. I wouldn't stand here and pretend that. But it is a very stable economy. And it does have a very stable government. And these are two things that a bank, a financial market, gets very comfortable with. So Atlantic Global Bank will actually bring big business to Grenada, and it will bring big international business. And these are two things that the government wants to see. And it already has positive economic trends in that stable economy. But again, we feel that we're going to be a major player, and we will be able to assist A, in the economy, and B, in those positive trends. So again, there are various slides here talking about the specific aspects of the economy as it stands at the moment. So whether that's agriculture or manufacturing, and showing you what the economy is actually doing at the moment. So on the face of it, you could be forgiven for thinking that it's quite a small country, quite a small economy. So again, there might still be a little part of you thinking, why Grenada? Despite what I've told you already about the good reasons why. But it might be a relatively small country, but it has some very big friends and some very influential friends, and it's a member of all the best clubs. So a whole list of different international and regional clubs that it belongs to. United Nations, the IBRD, so that's the International Bank for Reconstruction and Development, the International Monetary Funds, the World Trade Organization, and as you can see, the list goes on and on. So a small country, perhaps, but with punching well above its weight, shall we say, in terms of what it's already capable of doing. One of the other things I mentioned 10 minutes ago was it has a very integrated economy with other countries in the Eastern Caribbean. And because it is an integrated economy, it actually adds a lot of strength and depth in many ways to that economy and what we as a bank being established there will be able to do. So we're not looking just at Grenada, we're looking at the wider region. And I think the Organization of Eastern Caribbean States, which is this collection of countries in that region, their integrated financial system has a common currency, and even more to the point, it has a common central bank, the Eastern Caribbean Central Bank. So again, all of these preconceptions we might have had about it being a little small, it actually isn't when you start to look at it. It's a member of all the big clubs, it's got a lot of big friends, it's got much more regional pulling power than you might imagine at first glance, as it were. I've already mentioned that it's easy to access different markets, whether that is electronically, virtually, or whether it is physically. But I think one of the other really interesting points that might get some of you to sit up and take a bit more notice is that it's also one of those many countries around the world that offers citizenship if you invest in a business. So if you invest in a business out there, you are given citizenship. And if you are the holder of a passport from there, it allows you to travel to 121 countries worldwide without a visa. And this number of countries is growing all the time. And I haven't done a direct comparison with where that sits in the league, but 121 is pretty big compared to the vast majority of countries. The biggest number is 173, which is Germany at the moment. But Germany, UK, those countries are around the 170-ish number, and then coming all the way down to just a handful. 121 is a really significant number, and by investing in the country, it's relatively easy to get citizenship and to get that passport. So of those 121, I guess it's not a surprise to hear that that includes the USA, UK, Hong Kong, Singapore, the whole of South America, many, many countries that you will want to be doing business with, you then get access to without a visa. It's also a very well developed and trying to develop even more financial centre. And I've said that they're already growing, but that it is again the reason that they're very interested in talking to us about what it is we're doing. Because they themselves are extremely interested in looking at developing that whole process. They're trying to strengthen their own economy, they're trying to strengthen the legislative offshore base, and all of that means that, again, just as we've talked a lot this morning about being partners, effectively it enables us as the bank to have some sort of partnership type relationship with the bank, and with the government. And I mean by that simply that they're going to be on our side trying to help us to develop that. So I hope that even if at the outset you were a little unsure, I hope that by now you've already understood all the reasons why it is such a good place for doing business. There are many advantages, as I've already started to go through, but if you were to look at that list, the word tax appears in many of them. So tax exemption, absence of tax, absence of profit tax, absence of transfer tax, lack of business tax, etc., etc., etc. So it's a good place to do business, and it's a good place to become profitable, and it's a good place to retain that profitability rather than paying it away in taxes. So it is literally everything, every type of tax. There is one that doesn't actually say an absence of tax, but it is 0.59%, so I guess we can just about live with that. But overall, it is a very favourable business environment for investors in whatever form that takes. I've mentioned before that it's stable. You've seen that it's attractive. So what actually makes it so attractive? And it is the fact that it is attractive that helps it to become stable. So it's a virtuous circle. So the offshore zone is progressive. It is wanting to, just like the approach to FinTech, it's not wanting to stand still. It's not wanting to think, what should we sort of do by making small changes. It's actually wanting to be progressive, be dynamic, and make some real difference. And this is done by not just the government having an open mind, but there is a whole lot of professional services. So lawyers, accountants, insurance agents, and everybody that makes good business work efficiently. All of these play a very decisive role in the development of Grenada, and it makes it a very competitive offshore market. So specifically, those areas that it lends itself to are mentioned here: the registration of international trust funds, international insurance and registration services, offshore banking, registration of international companies, and registration of mutual funds. So all of the things that AGAM is interested in, all of the things that were being presented to you first thing this morning. So again, a very good fit in terms of having our own bank and in it being placed here. Perhaps one of the interesting things on this list of banks, and it isn't a terribly big list. But what was I saying earlier about looking at something and not looking at it how it stands, but looking at it and where are the opportunities? So where are the opportunities? We establish a bank here, we become a very major player. So it's not as though we won, there are 500 odd banks in the City of London. There aren't 500 banks here. If you establish a bank here, we are a big player. We're somebody important. We're a big fish in a rapidly growing pond. So it gives us extra advantages over and above what you would have if there was much more competition. In fact, I've mentioned the government a few times, and the government is actually potentially looking for a partner in order to attract investment into any sector that the bank will be looking at doing. So it's very, very interested in working with us because it wants us there. And again, working with a partner that wants you there is so much better than working with somebody that either doesn't want you or perhaps doesn't particularly care one way or the other. So what are the actual aspects? What are the core aspects that we are going to be bringing? Down the left-hand side, I guess they're all fairly obvious, but let me pick on a few of them. Integrity. In business, trust is extremely important. We all have a shared belief in openness, transparency, confidentiality. We want the bank, just like the rest of Agam, to be to have integrity, to be known for that quality, and to draw people there because of that. But we also need to have innovation. Just as I was saying before, we will be having that mindset about how do we apply how do we find a solution for what people want? We're going to be innovative. We're going to be proactive, not reactive. And it's going to be very much results driven. So the bank is going to be committed to delivering excellence. And it's going to be committed to delivering strong, prosperous, long-term relationships. We want clients to grow with us. We want clients to stay with us. We want clients to recommend us and help us grow because we are helping them grow. So again, it's this 2 + 2 = 5 that I mentioned this morning. And all of that centers around putting the client first. So this is, I guess, where we bring in some of this old banking type approach. So it is going to be highly personalized, premium service. So we're going to be using all the modern ideas, all the FinTech, all of the technology, the modern approach, the what's the problem now, let's find a solution type approach. But it's very much going to be focused around our clients and working with them, making them feel special, making them come back, making them recommend us. So what are the benefits to each of us? I guess the whole reason for doing this bank is that, isn't it? What are the benefits? What are the benefits to Agam? What are the benefits to you? And what are the benefits to the clients? So some of the instant business type benefits are things like instant wire or money transfer, taking just 5 seconds. So again, instant is the word, not a few days, or like my little story I was mentioning earlier about transferring money and it taking weeks going backwards and forwards because of a little problem. But you are going to be able to get cash from an account in more than 10,000 places around the world. We are going to be providing Visa and MasterCard payment cards, for example. So it's a marriage of the old and the new. And so these are perhaps some of the, I suppose, some of the technical benefits. But the real benefits should be seen as how does that enable the client to do their business better, quicker, more profitably. So it's really a means to an end. It's not just about what are the benefits to be seen boldly like that. It's what does that lead on to. Like any good business plan, you need to do a SWOT, strengths, weaknesses, opportunities and threats. And we looked at this, and if I pick out, again, just a few of these, some of the obvious strengths I've already mentioned. So you've got favourable political and financial regime, and work well with the US and the UK and many other countries, and an extremely favourable tax regime. The whole process of what I've said we want this bank to be is, again, this middle one of opportunity. We want it to be one of the first banks to merge the FinTech innovation and classical banking experience and client servicing quality. So, client first, happy client comes back, recommends us to other people, and we achieve that by using all of the advantages of FinTech. And the reason that we did the FinTech presentation earlier was so that you could start to understand the importance of that in how that impacts on this bank, what we will do and what we will all do together. Threats. So yes, there's high competition in FinTech and the banking market. And we've seen it's a market that is growing. So how do we react to that? We aim to be better and more personal than the competition. We aim to be a bank that you and your friends and your colleagues and the clients and their friends and their colleagues recommend to other people. And whilst there is high competition in FinTech and the banking market, as we've already seen, if you get it right and you're on the crest of this wave and you're in this exponential growth curve, the opportunities are very, very large. And we believe that by taking the approach that we have, that we are perfectly positioned in order to do that. And so, in theory, you could say it's a threat, but yet again, look around you, look at where the position is, and then look at what are the opportunities from that. Always, always look for where is the opportunity. Now, setting up any company doesn't happen overnight. We've already spent a lot of time and effort in where we've got to so far. This tries to give you an indication of the timing, because I'm sure it's something, in fact, I was even being asked at lunchtime, but I'm sure it's something that is of interest to you, because I know that by now you're already thinking, this is going to be really interesting for my business. So how can this bank help me to develop my business? So where we are now, we're, as I say, done an awful lot of the groundwork. And then we're in the process of incorporation and obtaining the banking license and submitting documents, and you know what it's like. Any business lots of pain to go through, especially when it comes to something like a bank. When you haven't just got the normal pain, you've got a lot more of the regulatory processes to go through. But we expect the bank, broadly, if you look at this, to come down through to being fully operational sometime middle of next year. So it depends, obviously, on a whole number of different matters, but we think this is a reasonable timescale, somewhere along there, but third quarter or so of next year, once we've managed to progress. Just like any business, we've been through all of the business planning and all these sort of stages. And as I've said, it's not a quick process, but so far it is all going to plan, and we are where we think we should have been on that timescale. There are three core pillars for the bank. So one is focused around clearinghouse for payments and e-money exchange and electronic money institutions, cryptocurrencies, that sort of sector. The other is service provider for FinTech clients globally, which is why FinTech is so important to us, because we're not only looking at using it in our business, we're looking at helping use it for other, to work with others in their business to provide those services. But also, as I said, we are looking at providing a classic banking products, but with a very specific, high quality, high level of service sector. So if I very briefly run through some of the those cores. So clearinghouse service. It is to provide settlement and clearinghouse service for electronic money payments for institutions. At the moment, so many of the existing banks use old, outdated technology, whether it's SWIFT or ACH. They're all too slow, they're all too expensive, they're old style, and they cannot service FinTech or cryptocurrencies. So we're looking at sweeping all of that away and setting up the new wave of FinTech that will enable us to do things quicker, better, cheaper, faster, and therefore provide a better service and make the businesses want to use us because of the actual benefits that delivers to them. We're also looking at providing processing services on a multi-brand, multi-country, multi-currency, multilingual basis. So again, as you can see, multi is the word to take from there. We're looking at being a real global presence in every way. So it would support all of the card brands, all of the card types, and all of the existing and emerging payment technologies, so contactless and NFC and the like. So again, not just going in where the banks are and then trying to adapt it, but going in at a much newer level in order to leapfrog where they are. We're also looking at acquiring e-commerce and online gambling and other such e-commerce sort of movement of monies and assets. And if you look at this, the global market is 1.5 trillion US dollars, trillion. And we've set ourselves a goal of looking to take 1% of that market in 5 years' time. So 1% is a very realistic sort of number. And you may think, if I just said 1% first, and I hadn't have said 1.5 trillion, you might have thought, well, that's not so exciting. But 1% of $1.5 trillion, I think, is very exciting. And And again, on all of these, look at the forecasts for where we are on the graphs on the left. We're also going to be offering a peer-to-peer lending marketplace. And again, you're all experts now on what peer-to-peer lending is and what an important part of the FinTech sector is, and how big that market is and how rapidly it is growing. We intend to be a part of that by providing a platform, as it were, for others to be involved in that. So again, looking at how we can add something to what's already there. In a report published by Morgan Stanley in 2015, it said that the P2P lending was predicted to go from 150 billion in 2015 to 490 billion in 2020. So a big increase. But I actually think that's a bit pessimistic because it actually grew 53% during the previous period. So it's growing rapidly. But if you look further down, the Europe's alternative finance market grew by 92% in 2015. So these are big numbers with big growth. And all of these charts that I'm showing you on these next slides are showing the same sort of growth level for where we expect to be over a 5-year period. Foreign exchange trading. So we're looking at enabling you to trade FX online in a quick, transparent, reliable manner, and likewise for cryptocurrencies and Bitcoin. So all of these things are where the world is going, and we intend to be jumping straight into that world and doing it from the outset, which gives us an enormous advantage from those that don't have the knowledge or the experience, and those that don't have the, or should I say, have the existing legacy of the fixed assets of the older banks. Private banking. So look at some pairs of words there. Private banking, tailor-made, classical banking. That's the part of the market that we're looking at really giving the old-fashioned type of banking to, but providing them with a new part also. So each private banking relationship is unique, it says. And I think that's very much the point. Every client wants to and should be looked after individually. So we have a keen understanding of the markets, of the dynamics of secondary residency, whether you want to invest into Grenada and get citizenship, whether you're looking at investing in other places, what the legislation is. So offering, again, a global service. We're looking at leveraging those results and providing portfolio management and trading expertise, and sort of combining all of these different things, the old and the new, the private banking and the technology, in order to provide a really first-class service, again, to help the client to maximize their profitability, to keep their profitability, to recommend us, to help us grow the business, and for us to grow their business. Money market products, foreign exchange, futures, trading contract options, all FinTech is related one way or another, whether it's in energy exchanges, agricultural, soft commodities, precious metal, currencies, stock indices. You're going to be able to trade futures in all of those and everything else. So it's just a very large trading platform, and again enabling us to offer what it is the client is looking for. Fiduciary and trust services, classical trust services, wealth management, all of these areas. But again, I come back to still the classical banking service also. So I guess by this stage you've started to think, well, maybe what about some numbers on this? Again, it was mentioned earlier, looking at a sort of 5-year plan, as it were. So we've projected figures, as you would expect us to have done. So if I just pick out some of the figures for 5 years, so total assets here of 587 million. When you look at the total profit and loss here, it's actually extremely good for the turnover. And that's because we're benefiting from what I've said already about FinTech. We will have low fixed costs, but therefore very high margins. That, coupled with the base in Grenada, with the low tax benefits, etc., means that as a bank, it will be a very profitable bank. I'm sorry, I haven't kept up with the slides. Oh, by a long way. Oh, sorry. Okay. So, in order to make sure that the bank is safe and secure, we also haven't focused just very tightly on one individual aspect, one pillar, as it were. What we've looked at is how are we going to divide our business, where is that business going to come from, and what do we expect to turn over in each of those sectors. So, fiduciary and trust services, we're projecting a turnover of 1 billion by the end of year 5. In terms of acquiring e-commerce and gambling, again, also around the 1 billion mark. Likewise, in foreign exchange, cryptocurrency, bitcoins, about 1 billion. So you're starting to see that one sector isn't totally all that the bank is going to be focused on. We're going to be looking at providing different sectors which gives us greater depth, greater strength, but also a broader range of services. P2P lending, because of its importance, 1.25 billion. It's just a market that is set to grow more rapidly, and so us to be able to get a percentage of a market that is growing even more rapidly. And then brokerage and wire transfer of 500 million. So again, broadly 5 sort of pillars that are all supporting the overall base, as it were. And we're going to achieve all of that by investing significantly, specifically in technology, which won't be a surprise to any of you after what I was saying earlier. But technology and software. But the important thing is we will be investing in the best systems and cutting-edge technology. And that will enable us to do all of these things and provide the level of service at the level of cost and to obtain the percentage of the market share that we're projecting. As you would expect, we will have a fully developed risk management framework, well experienced, fully integrated risk management system, looking at controlling all of those risks. And we'll be looking at avoiding risks for ourselves as the bank and, of course, ourselves as the clients. So controlling our risks and their risks in all of the ways that we need to do in terms of hedging, but also in terms of control and systems and back office functions. And then, of course, again, what you would imagine is a full know your customer, anti-money laundering type framework, which is required everywhere in the world nowadays. So simply making sure that we know our customer from the legal due diligence point of view, but also that we know our customer, as I've said again and again, what they want, how we can deliver it to them, how can we make it better, how can we make them want to come to us so that they help us to grow our bank. So let's summarize the benefits, I guess. Again, let's tie it back into the very beginning of the day. It's a very, very logical step for AGAM to set up its own bank. We've got to that stage now where it's a necessary step, I would suggest. And if we're going to do that, let's not set up an old-fashioned bank. Let's not set up something half-hearted. If we're going to do it, let's do it properly. And let's play to all the advantages and use all of the knowledge that we have to maximize the benefits for each and every one of us. So we're going to be using FinTech. We're going to be using some of the old-style private banking type approach, but most importantly, with all of the advantages of FinTech and using the new style mental approach, as it were, of, as I say, identifying what the client wants and how we're going to achieve it. So I hope you found that quite interesting. And, well, let's look forward to the next year or so, and AGB will be up and running and will be able to deliver all of the services I've just been telling you about. Thank you.
Thank you, Kevin.